Hey, welcome to Closing Beat, everybody. Happy Tuesday. How we doing? Still got all your hands and fingers and such? Did you have a good 4th of July? I hope everybody had a good time. We had a good time. We had a good time. They had some sales down here on fireworks, so we tried some different stuff. It was a good time. I hope you had the same there. We are financial advisors here at Jazz Wealth. Appreciate you guys hanging out with us. Just like to cover the stock market every day. Talk about things, data, stats. Got a lot of that for you here today. And I said it the other week, kind of like, what's the, put your finger in the air. What's the wind of the market? What's the general temperature? It's just nice to check in on things like that. We're, I think, one of the only advisors that actually spends time doing it, because that's actually our background, is managing funds ourselves. So if you want to check us out, jazzwealth.com. Otherwise, we'll get into the good stuff here. Fin tips this week. Got a bunch of Eric's got actually a great couple videos coming up there. Hope you enjoy and have enjoyed Eric's videos there. Our Wine and Wealth class last week was on crypto, NFTs, and tax loss harvesting. They are not the same as stocks. They are both completely different. So we went over the extreme details of how that works in case you find yourself in that position. Because, hey, stocks go down. You use that moment to maybe rack up some losses on paper and everything. Why not do the same for you crypto people out there? So didn't want to leave you out. Got you guys covered there. This week, Eric will be covering updates at Nest Egg. So he is the Nest Egg guru around here. And we're hoping to get him set up so that he can take a shot at it for one. I'll be here still, but, just kind of see what he can do there. Anyways, if you look at the stock market today, it doesn't look like much. Like if you're an end of the day tape reader kind of a person, you're like, wow, look at the NASDAQ. Oh, it's impressive. Must have been something good going on there. But it doesn't look like a lot happened elsewhere, when in fact it was a wild ride both ways there. We actually started, so yesterday, if you didn't know, the futures market was open. They don't close the futures market. It closed early. And so the futures market was open. Use the Dow. Dow's up 100 points. S&P's up 12, right? So we're up. You go, oh, cool. I'll go light some fireworks. I'll go to bed. Wake up this morning, all the way down. Gave it all up. We ended up opening down 500-600 points, something crazy like that. And then throughout the day, we actually end up with a slow but steady rally there. I'll use the SPY so you can see from the open here. Look at the 5-minute chart of this sucker. Start with a huge gap down. You go, oh, here we go. Another half of the year is going to look like heck. It's going to be bad. And then throughout the day, first part of the day, me and Eric were talking, and I'm like, look, they're smacking them down there. And bulls just kept going all day. And we finally got back to scratch for the day there. There is a ton of bad that could be talked about right now. And that sucks because that, you see that stuff on YouTube or TikTok or whatever you're watching, and you think, this is bad, right? This is really, really bad there. The first half of the year, so people track this. How many days are positive? How many days are negative? And any point you go over or under that halfway point where more days are negative than are positive, there's scanners and stuff you can set up for that, and people like to track that. Generally, you see more than half of the days of a given month, quarter, half of year, whatever you want to analyze, more than half the days are positive. That's why you have a normal upward drift in the overall stock market there. Well, in the first half of the year, you actually had less than 50% of days that were positive. And that's actually the 9th worst in history, and I've got history on the screen here for you. 52% is actually the average. So if you want to set a scanner or whatever, if it goes under 52%, you just want to know about it or something, chances are you're going to see red on the screen like you see here. So what we have is in the first half of any year where less than 50% of the days were negative, or less than 50% of the days were positive, we actually just showed the returns. So is widely probably published data out there. But so you can see 3.3% in 1931 going into 1932, minus 45%. These are the outliers here because you have a slight down half and then you have a monstrously down half, right? Then you have a huge down half and a huge up half. So that's kind of the outliers. You toss those off to the side to look more of the median here. And what you have is basically an average gain in the next half of 5.4%. If you were to put an average line on here and just kind of roll with that, that's what you would see. So when the market has less than half of all days being positive, it tends to bode well for the next matching time series that you're analyzing there. You could do it on anything, really. You could do months. Day traders can do days and weeks and stuff. It's actually kind of interesting. And that's just because of the long-term average being 52%. The trouble is, here we are over here, 2022, first half of the year is done and over with. Well, on the up days, our average gain was 1.25%. All right, that shows more volatility than normal, but we're cool with that. On the down days, which outnumbered the up days, the average loss was 1.26%. Well, if you're familiar with the video that I've done and the classes I've done on investing stats and trading stats where you track your own progress, there's something called a batting average, or I call it a batting average, and your win-loss ratio. Batting average is how many times are you a winner, and win-loss ratio is how much more did you win versus losing. You can actually get 33% of all your investments right, and the rest of them can all be wrong. But if your win-loss ratio is too low, then you lose, right? Your win-loss ratio is very high, you can be wrong more times than you're right. A lot of people misunderstand that. They think you have to be right more than half the time. It's not the case at all. So when you have 1.25% on up days, 1.26% average on down days, but there were way more down days than there were up days, you have a recipe for a loss, right? And that's just using averages there. So rather interesting there. But that's all bad news stuff, right? Let's start the new half off good news, man. Give me some good news out there. Look, it's only the 9th time in any of your lives that's watching right now, that the S&P has lost over 15% in a quarter, right? That's actually locked in losses of that. It doesn't sound like it would be that rare of an event, but it actually is. It gives you a reason to believe in being a little bit positive here. I'm just going to show you the data. Here we go. This is every single quarter where the S&P lost 15% or more. And then what we did is we said, well, what did the next quarter look like? Did we get a bounce or not? So 1946 in September, we lost 18%. The next quarter was slightly positive. Same thing here, slightly positive. Most of the time, you get a decent little rally back. There's only one time in history, that was in 2008 during, well, that mess, that we actually saw that. The average gain over the next quarter is 6.2%, right? 6.22 if you want to be exact. And so when a quarter is particularly weak, well, that sucks. You know what I mean? But you got to use that as an advantage to say, well, there's got to be some opportunity in here, right? Don't run away from that because history would prove itself to say that people get bored of a market that's going lower and they want to actually take advantage of it. They want to buy cheap stuff. And so that happens. It's not because last time was different, the time before was different, and something happened and you can't count that one. No, it's people get bored or people get excited to see a discount there. Take it a step further. What about over 2 quarters? I told you it was kind of fun to see the normal upward drift of the market. Here's what happens if you lose 20% or more in 2 quarters back to back, right? So they got to be the same, right? One after the other. Well, there's still only one time, and that's the exact same time in 2008, where the market was lower. Otherwise, you got a recipe for an average gain of 8.51%. If you were to plot an average here, you would see that when you lose more than 20% in a quarter, okay, the odds are it's going to be positive. The odds are it's going to be positive by a decent amount, 8.5% there. So it's worth looking. Now, does that mean that the market's going to bounce here? No. I don't do that here. Remember, my thing is finger in the wind. Is the tide looking to roll in or roll out, right? Should I be looking for ideas or should I be running away and just sitting, maybe focus on tax loss harvesting, Roth conversions, things like that? No, you should be looking. Now's the time to build that shopping list. Get in there and look around a little bit. Start finding things that maybe you're interested in. It's only the 8th time, as you just saw in that chart there, give you a little stat there, 8th time that has fallen more than 20% in a 2-quarter consecutive span there. And again, only down one time, and it wasn't even that bad. I would actually welcome the next quarter, next half of the year being down like that. I think that would be very helpful. All right, so what do we have? Like, how do you go from being down over 20% to actually something that can give you a sustainable rally here? I think the initial thing, and we could debate this all day, is going to be the Fed having a more uniform and consistent message. They've been a little bit all over the place lately. They said last week the economy's picking up. Now, they're not ones to be political and just say like, oh, unemployment's at record lows. And they don't do that. So they said the economy's picking up. And you're like, okay, great. But every data point since then came out worse than expected. Every economic data point that you can find there. So we're all wondering, like, okay, where are you guys seeing this? The Atlanta Fed, if you actually look on their site, they lowered their projections for GDP growth, actually lowered it down to 2.1% last week. That would mean we're in a recession if that turns out to be true there. So where's the good data? So the conflicting information that you have coming from the single source that can really manipulate the stock market there. So we're going to look for any data points to confirm what they're saying there. We got consumer credit, mortgage applications, ISM numbers, so much more coming out just this week. And then before the Fed actually has their next rate decision on the 27th, we'll have housing starts, building permits. We'll get to see inflation numbers yet again. And that's before they make their decision there. So there's a chance that maybe things do show a little bit of picking up there. But for the moment, people are betting on they're going to jack rates up again another 0.75%. And then probably sit back and see what happens there. We will see. Anyways, all that to say, the S&P actually took a shot at putting in a higher low. We don't fall for one-day moves here. We say, well, that's good. Maybe we're doing something, but we don't fall for that. We look at the next day to see, are we going to just erase it all? Because so many times all through this downturn, we have erased what seemed to be really good, strong days and interesting, momentum behind the market there, just get evaporated and erased. One reason that may happen again is because today, what led the market higher was just a handful of stocks, right? I'll say a slightly larger amount than a handful. Apple, up almost 2% on the day. And basically strong all day long. Alphabet, up all to 4%, right? Over 4% there. Amazon finally getting a bounce. It's been really struggling to participate in any bounce in the stock market. They're up 3.6%. Big name, Tesla here in the S&P, up 2.5% there. And then I got to go Meta. I'm still getting used to typing that symbol. Meta with a day off lows there. All right. So let's look around. Where else was supporting the market rally today? Maybe NVIDIA a little bit and Salesforce into it. Other than that, you didn't have banks. There's JP Morgan making new lows. It did come off lows a little bit. You didn't have healthcare. We know healthcare is the second largest sector in the S&P. You got to have healthcare. Doesn't matter where you look. United, Humana, these are otherwise strong areas that have just, didn't participate today. Look at some of the defense, like Raytheon. Nope, don't have that there. Look at energy. No way, right? What really bad day for oil there. Look at utilities. Nope, didn't have that. I'll use the ETF for utilities so you can see. Big, strong pullback there, right? And rates moved lower today. So you've got a lot of that going on where the rest of the market said, no, we're going to stay weak, right? We're not strong. But those, call it 10 stocks, if you include a couple semiconductors as well, they said we're going higher. And that's the reason why you look at the NASDAQ today and you go, well, why is that up so much? Because the bulk of the NASDAQ in terms of weight was the one doing the heavy lifting. Everything else pretty much just held tight and didn't do a whole lot of anything at all. But nonetheless, we're starting off the new quarter in a good positive way there. And so we'll take it, right? Granted, it was just the big names that did the heavy lifting, but it's what it is. Oil, I don't know if you saw that today. Big move lower. That's good for politics. You got oil down under $100 and actually closing under $100 there for the day. That took down all the oil stocks. It doesn't matter. Wherever you look today, you're going to find everything was down. I'll go broadly, look through the oil explorers, right? Huge discount there. Energy, back to the 200-day moving average. Oil service stocks also very extended here in the short term, something to look at there. And so they stood no chance today, really. Gold down 2%, finally breaking down below the lows there. No inflation play to be had at all, period. Right? Really consider why you invest in gold if you see this or you're participating in this, right? I told you bonds give you a little bit of a rally. Interest rates moving lower. Very sharp rally. That's almost 8% in just the last 2 weeks off of lows there. So that's good news if you're saying, well, I wanted to sell my house and buy another one. Rates are just ridiculous. I'm not going to do that. Get a little bit of a break there. You're keeping an eye on it day to day. I don't know. The topic, I believe, was today or over the weekend or something, the 2s versus 10s, the yield curve. I did classes on this in the dojo. You can check it out. But the yield curve inverted again. And they always say, well, that's a sign of a recession. we're kind of already in a recession, right? Anyways, if you're one of our clients, you want to check that out. And the stats behind it, every yield curve inversion does not lead to a recession, but every recession has a yield curve inversion. That's the kind of fun way to say it there. Hey, I want to point out one other thing today. Your beaten down stocks today, they came in with a strong bid, which is just a fancy way of saying a lot of people wanted to buy them today. Look at Roku, up 10% today. Etsy, oops, there we go. Etsy, big mover there. What's going on? What's going on with all those names? It's names like these that were beaten down. Affirm, right? These guys were a big deal for a while. Up 15% today. So people went and bought any name. Go look at all the names that have been beaten down like this. Big moves today. Granted, these are massive losses, but that's odd, right? That kind of stands out as something. So I just wanted to point that one out to you as well. Other than that, market-wise, that's basically all that I have for you here today. New highs and lows. Only one new high, 52 new lows, but about half of them reversed with the markets today. The only new high was General Mills, and that's super extended right now. It did pull back throughout the rest of the day. Maybe one to watch on a pullback, but no need to chase it there. And then, as I have been doing, any new lows are going to be those that are most extended. Right? See the gap between price and the green line there? It's just the 20-period moving average. Very extended on Lind now. Very extended. That was just barely new lows before we got a little bit of buying there. If you go to Freeport, also very extended, especially over the last couple of weeks here. So I want to put that on the list. Caterpillar and Deere fit into the same one if you want to look at that. And then you got NXPI Semiconductors, which... many semiconductors made new lows. You could actually look at like CLAC, KLA10 Core, I always say CLAC, Lam Research. They're just not as extended. So they're worth looking around if you like that, or if you want to just maybe buy the industry. But yeah, they're not all as extended as they could be. Just that NXPI stands out as being a little bit more extended there. All right, stocks in the news. Oh, can I hit it? What button do I hit? I'm going to try. I don't see one. I'm going to go with this one here. Nope, it's not that one. I don't know which one it is. Oh, I go with... Here we go. Oh! Tesla, 255,000 vehicles produced there. That was a miss. They were around 265, 267, 264, somewhere in there. But remember, Elon Musk really telegraphed this about a month ago, talking about employees are going to need to rally hard if they were going to meet their numbers there. So that didn't work there. 255,000. Harry can correct me if I'm wrong here. That's a lower number than last quarter, and I believe the quarter before, if you're taking a look there. Earnings are up for them July 20th there. So that was one of the stocks that was in the news. That'd be Tesla. Las Vegas Sands, which I don't know. Yeah, they're just Sands now. There's no Las Vegas for Las Vegas Sands. They don't have a Las Vegas casino. They sold it off there. No properties there. Anyways, Las Vegas Sands was in Barron's. They said they should be doing a lot better now that China was relaxing some of its COVID policies there. But remember, that comes and goes real quick there. They have 6 casinos in Macau, 1 in Singapore. That's it, right? So we don't need to say Las Vegas Sands anymore, because that's not the case. Occidental Petroleum, Berkshire Hathaway, about 10 million more shares. I think that's old news. I just wanted to bring it up for you because I was focused on again today. ExxonMobil in the news there. They said the impact of Russian production disruptions should be between 100 and 200 million. Just, between $1 and $200 million. This hasn't worked, right? Everything going on over there in Russia as far as financial and economic sanctions by us and other countries has not worked at all. Look at the strength of the ruble over there. It's not working. That's an easy one. So all the economists are out there going, that's great. Go Ukraine, but nothing's worked that we've done here. So I don't know what to tell you. I'm glad I don't deal with that there. And what about ATVI? Let's try it out, huh? Ooh, look at us getting fancy, man. Before long, it'll just like flow and you won't even know. So ATVI, You look at Barron's over the weekend. They said, look, concerns over the antitrust blockage of Microsoft takeover are overblown, which was the big statement that they put out there. They got a little bit of a heads up from the CWA. It's the Community Workers of America or something. They came out with a letter that they actually sent to the FTC saying, we're in support of this deal. We like what we've come to with this agreement. We're in support of this deal, trying to urge the FTC. They could have very easily gone the other way there. Remember, $95 is the deal price. So if I were to go over here for a second, you're at $78 today, now with more excitement over this deal being able to go through there. It's an all-cash buyout, would be at $95 a share. So you got a lot of the merger arbitrage people out there thinking they're going to buy that for $95 a share. That's if the deal goes through. Careful on that one. Also, I don't know if you saw this, Cody, but I keep track of this stuff. Jeff Bezos went to Disneyland. So what's up? You can't go to Disneyland? Disney World over here? You gonna go? No, you should go. Let me take you to the happiest day you've ever had. Sad part, actually, for Jeff Bezos. He had to go with 5 bodyguards, and he took the VIP tour, which I think is like $3,000 for a couple hours or something like that. So he didn't just walk around and wait in line and stuff. He took the VIP tour. And his girlfriend did not want to go on Space Mountain with him. So there's a picture of him on Space Mountain by himself. Not even his bodyguards? Like, come on, I'd have rode with him. I'd be like, listen, sir, you got to let me sit behind you. I got to be, you make the man go by himself. That's horrible. And did you know, before we let the stream catch up, I'll take your questions here, but Rihanna, you know Rihanna? She's worth $1.4 billion. Yeah. I think that... No. I know of her, but $1.4 billion? No. I had to look it up. She's got makeup lines, lingerie lines. She's got all kinds of skincare stuff. And apparently they're selling the devil out of it. So they did $550 million last year. I don't get it. That's how you know I'm getting old, is like, I know of her, but I've never seen her product, but I guess, I'm not a woman. Yeah. Did I just define it? I know. All right, bud. All right. What do we got here? Let's take a look at your questions. Happy to answer questions as they come out there. Tesla's going to keep crushing numbers in years to come. If they could get Shanghai fully going again, yeah. I'm with you on that one there. They're always trying to push it a little bit harder and harder, but yeah, I gotcha. China shutdowns did cause a Tesla miss, and it's all baked in there, right? It's all kind of understood ahead of time. That is one of those where you think it sounds like a bad headline, and it looks like a bad headline, but you got to do more than read the headline, right? I was talking to my wife over the weekend, and we were saying, like, if you ran for president, like, what would you do? And I was like, well, first thing is TV stations cannot all go to commercials at the same time. Like, I'm about rallying for the people, right? We got to do things that, it really help us rather than fight about all this other stuff they're fighting about. And I said, the second thing I would do is I would not allow H1 tags, which if you're making a website, H1 is the headline. No more headlines. The story starts, right? You have to read the whole story. Because I see a lot of people that read headlines and go, oh, I'm going to make a video about this. That's not right. Why defense stocks get beaten up today? Well, not everything participated. So I don't think it's a matter of them getting beaten up, beaten down, whatever you want to say. I think it's a matter of, hey, the market itself was not very strong, right? As a whole, the index looked like it did well because, well, the top 7 names had a good day. But in reality, everything else was kind of scattered around, some worse than others and things. But like I was showing earlier, it wasn't a broad, consistent rally type day. Yeah. Taking 3M at 126, are you? Nice. Did you get it down there? Look at you go. All right. Maybe a nice buy there. Alibaba, you want to 140. Got to learn how to type it there. Here, look at this. You've clearly broken the downtrend. Look, I was just talking about this last week. You break the downtrend, let it go. Whenever a stock's in a long, drawn-out downtrend, let it go when it first breaks and look for the pullback. You don't even need a great entry, just let it pull back. Then you know you're not the only one coming along for that ride, and that's awesome. That's kind of working out for you there. So slow ride to 140 I could agree with, an immediate shot back up there. That's a tough one. Yeah. No, MW, you can't do that. I'm just saying articles only. Like, I just make the rules. I don't know how to define them or whatever. All my people, when I'm the president, I would have a special, like, headline czar. That's why, come on, don't let the presidency go to my head already. I'm just saying articles only. They can be short articles. Just get to the point. Yeah. I like it. Yeah. What's the next big meeting or catalyst that's coming out? Inflation. Well, you got jobless numbers this weekend or this end of the week, and then so jobless numbers at the end of the week, and then you'll have inflation, right? So that'll be the big focus. That'll get the most attention prior to the Fed meeting there, but that would be it. Yeah, 5-year break-even inflation is dumped. See it pull back into Halloween. I'll take it. How do volumes during the summer compete with the rest of the year? Significantly lower, more than 50%, typically more than 50% lower. This year so far, there is a clear decline in volume, just not by that level, right? Not by that level, especially this time in the summer. People are still hanging out. Yeah. Which way do you think the market breaks with the jobless numbers? I don't think there'll be much. So here's the way I say it. Right now, we already have expanded volatility. So we already are, look what happened today. We already see this wild back and forth, right? Throw in an econ number in there, we're not moving outside of that range, right? If it were normal summertime and we're just tight, contracted little intraday moves and then, small range days, well, then the effect of that economic number looks like more. Right now, plus or minus 1.5%, you wouldn't even think anything of it. It wouldn't even seem odd. That's the tough part. Do you think we'll have a better second half of the year? Yes, I do. Absolutely. Yep. Yeah. Jobless rates still good. Fed's still on the gas with interest. Boy, if you have nothing but good economic numbers, building permits, it's not going to happen. But if that were the case, it really makes you wonder. I bet they'd still at least go 0.5%, though. Yeah. Yeah. Well, the war part is not my cup of tea, so that's my cue to wrap it up. You guys enjoy the rest of your day. Thanks for hanging out with us here. We'll be back tomorrow, which will be Wednesday, to do this all over again. And appreciate all the subscriptions, thumbs up, all that good stuff you're doing out there. And we'll see you then.